Next week, we get earnings reports from the big Canadian banks. Royal Bank is due on Wednesday, and that is one of our guests' high conviction stocks. Let's get more from Shiraz Ahmed, CEO at Sartorial Wealth. Great to see you.
Thank you for having me back.
Now, just remind us, you're a quant, so momentum is a crucial criterion for you.
Absolutely. So in our Sartorial Opportunities model, we follow a momentum-based strategy where we use a lot of math ultimately to help determine, is a security having positive momentum at any given point in time? If it does, then we participate. It's a way for us to have more dispassionate decision-making.
But you don't just jump on a stock even because it's going up. You're interested in risk as well?
Absolutely. So the primary factor that we're solving for is risk-adjusted return. So we want to see how is it doing relative to its overall volatility. And it's extremely important, even if it's trending upwards, but if it's increasing its risk while it's doing that, that may not be a name that we want to hold for at least the long term. And
risk means volatility?
Primarily. So we look at standard deviation and then ultimately compute it into the Sharpe ratio and to see, is it worth its weight, frankly.
And the Sharpe ratio technically measures risk-adjusted returns.
That's correct.
Royal Bank is showing up on your screen. Tell us what's jumping out for you here. That stock's been hitting record highs.
Absolutely. Well, other than the obvious being the largest bank in Canada, it's a name that's been performing quite well. The banks have been on a tear in recent months. So it's a name that we like. I appreciate that earnings are coming up next week. While that's not necessarily a factor that we look at very closely, at the moment, the momentum has been very, very positive for it. I think on the back of the HSBC acquisition, it's been performing well.
Let's have a look maybe at a 10-year chart for Royal Bank because it has been hitting record highs, slipping slightly today, but up well over 20% in the past year, excluding dividends.
Absolutely. So again, it's been a solid performer and a great name, and it's a household name in Canada. And even internationally, one of your earlier guests was talking about the top 9 picks, so it is up there. So it's a name that we have a high conviction on. So long as the momentum stays positive on it, it's a name that we're happy to hold.
Franco-Nevada, FNV, shows up well as a precious metals idea.
Absolutely. Now, in recent months, given the gold's volatility, we have decreased our weighting in it slightly, but it is still a name that we like and has scored well. The momentum in the gold space overall has been positive. That's one of our favorite ways to play gold.
It's actually down from its record high, but a lot of the gold names are because gold is not quite at record highs. Do you ever buy individual gold producers, or are they just too volatile?
The volatility on them is just a little bit higher. So we find Franco-Nevada is a little bit more stable, especially with the company having as much capital as it does at its disposal. It's gold with a dividend, frankly, and we like it.
Here's an interesting name, Alibaba.
Yes. So Alibaba is a name that was recently introduced into our international side of our holdings. And again, it's a large Chinese consumer company. They have a lot of different opportunities within them. And it's another way for us to play AI in China, frankly. And it's a name that we've liked.
It's interesting. I mean, it is off its highs, but you do see decent momentum for this name.
The momentum is starting to pick up. Again, it's still a fairly low weighting in our model overall, but it is starting to pick up and is a name that we do like.
Right. There was a story yesterday suggesting that the U.S. military is wary of Alibaba over its connections to the Chinese military. But of course, your model, that's not a thing that enters into this model anyway.
Not specifically. Yeah. Again, we're aware of it. It goes into some of the fundamental analysis that we do for names that are going into the model. But overall, again, the rhetoric on sort of Chinese political intervention is there for a lot of Chinese securities overall.
Oh, for sure.
So how much of it is truth versus speculation is hard to determine. So for our purposes, we tend to look at price momentum as our main variable.
Yeah, and the stock is up about 86% this year. And then finally, GSK, a huge name in healthcare.
Yeah, so again, another one that has scored quite well. It's been a pretty substantial holding. Now, there's a little bit of R&D risk with any of the pharma names, so we're trying to keep that into check while we have it in our overall portfolio. But so far, it has, number one, helped with international exposure, but more importantly, it has been a fairly solid performer over the last little while.
Yeah, you can see up about 30, almost 40% in the past year. Not sure if we could pop up a 5-year chart for that one. I'm not actually clear on whether it's hitting record highs, but certainly moving up sharply in the past year. Yeah, that's interesting because these healthcare stocks sometimes, or these pharma stocks, it feels a bit like showbiz. If you have a hot product, a hot movie, or a hot pill, investors love to get into the shares.
Absolutely. So they do. And it's also a lot of news-based as well, like there is with most securities. But, you know, for example, you know, the recent lawsuit that they've had, it's been favorable on GSK's side. So, again, that's been positive for the stock overall. And there have been some share buybacks and whatnot over the last little bit, which, again, have been positive for the stock.
Shiraz, thank you very much indeed.
My pleasure. Thanks for having me.
Shiraz Ahmed, CEO at Sartorial Wealth.